which kind of gets us to our shout outs. Okay, so I wanted to shout
I
out
love Colorado.
shout
do
out
too. I
to
do.
shout out to Katie and John. They're going to be closing this week, Mike, on their most recent sale here in Palm Beach County, and then they're going to be closing when up there in Central Florida.
It's a couple weeks.
It's a couple weeks away.
Although I got a scary call from John this week.
What was that?
He texted me. He said, "Mike, give me a call when you can." So I called him. He said, "Mike, I know we're not supposed to do stuff like this, but we went to a hardware store and they were having this great, promotion or something, something along those lines."
Right.
He's like, "Is that going to be a problem?" So, when you qualify for a mortgage, you qualify for a monthly payment. That's based on debt to income. And so I want the debt and the income to be as fixed as possible, right? Like from the time that I first talk to you and get you pre-approved until the finish, I want to know that situation is more or less stable. So that's the call I dread. And I said, "Well, wait a second. You already did it?" He's like, "Yeah." And I said, "Okay, well, how much did you spend?" And then I hear Katie in the background say, No, we didn't do the card. We just did the pro, the pro. You can sign up to be a pro with this particular hardware store. So crisis averted. They didn't get a new card. Now,
it's funny that we were talking about that this morning.
and I try to talk to people about that. And there's other people who was like, "Mike, I know you said to call before we did something like this." I'm like, "Thank you. I'm glad you did." Because then I can say, "Yeah, that's fine. No problem. You can handle, you got plenty of space." Like getting a new car is not a big deal. A new card. Going out and getting a new car, automobile could be could be a game, a breaker.
This morning, I was pulling into the parking lot in the morning to get set up for the show, and Jimmy's always there first, right? So I see his car parked in the driveway. Well, today it's a different car. So the first thing you saw too. First thing I said to him was like, "Jimmy, please don't tell me you bought a car." That's the first thing I said to him. He laughed. He's like, "No," but
now had he rolled up in your car, like your style of car, I would have been like, "Wait a second."
Oh yeah, super fancy car, right? It isn't really.
Actually, with that, if you don't mind me asking, Mike, you mentioned about this person got a new credit card, right? So that wasn't a problem. How about the increasing a line of credit on the current credit card you have, so not with zero balance on it? Is that a big deal?
That's fine. Even having a new card would be okay, but there's always it's about the payment, like the minimum payment on the card. So getting a new card from a hardware store, not a big deal. Getting a new card and then buying $5,000 worth of stuff.
Oh, well, of course.
And that's going to result in a, $150 monthly payment. That can change things.
Sure.
And some people are at their limit, so they cannot handle anymore.
We have
monthly debt.
I can't pull it up because I'm not technologically savvy, but we have a list that we give our buyers when we sign the buyer's agreement of the 10 things you must not do now that you're pre-approved for your loan. Right. So
are there really 10 things?
Yeah, we have 10 things on there. So one of them is don't apply for any new credit. So like if you're going to one of the big box stores and they're like, "Hey, you can get 10% off if you apply for a credit card," don't do that. Right?
And one of them that's common. So like stuff, people are like moving and they're planning on, sometimes they have to do stuff, or maybe they have to do stuff to get their house ready to sell. So it's very common to like apply for that type of credit. Also very common, furniture, right? You go to furniture stores.
I have that on the list.
They have the deals, 18 months, 0 interest, that type of stuff. So
don't do that.
Yeah.
We have also don't make any cash deposits into your bank account without talking to Mike.
Yep.
Right. Because you have to season the money. It's called knowing where the money's coming from.
So the key though is always talk to Mike. I mean, I think that's the key.
Yeah.
So like you talk about furniture. What if it's one of these? No payments till 2026.
Yeah.
0 payment, right?
Yeah. I mean, it depends.
For real?
I mean,
they're going to pull your credit and everything.
So we're going to pull credit. The question is, what's the minimum payment on the card? And there's probably some rule, Johnny, where it's like, if it's a 0 payment, calculate using this, 5% or 0.5% or 1%, kind of like we do with student loan.
Gotcha. So there would be some little if then kind of.
Yeah. Is there no payments until?
I've just thrown out some random.
Yeah, no, they do that.
Usually like 3 months or something.
Well, one of the examples I use and what not to do now that you're approved for a loan is Mike's mom. Because Mike's mom, when she was buying the house down here, she went to a furniture store, very well-known furniture store, and she went to go buy the furniture I guess she was going to use credit for it. And the salesperson was sharp enough to say, "Are you using financing to buy the house? Do you remember this, Mike?"
I think
And
I
then they
remember
called
talking to
you.
her
They
about it.
called. She called while she
Okay.
was at the store, and Mike was like, "No, do not do what you're planning on doing right now, right? Because you'll screw everything up." So even your mom almost did it. And then the one deal I've always said, Mike has never said that he can get a loan and not get it, not one time, except this
Yes.
one time, right? The only time was this young couple got pre-approved for the loan. It was FHA financing or something, and then right before we closed, they went out and bought a sports car.
Oh,
And then they bought all this furniture on credit. And Mike, it blew out their debt to income
Yeah.
ratio, and there was nothing they could do. And Mike could not get the loan. Now,
Oh.
this is at the end. They didn't talk to anybody. They signed that document of the 10 things not to do. Actually, one of the things says, do not get a new car. Do not finance a new car, or you may be living in it.
yeah, it does. It's exactly
I actually
does.
put it in there.
Yes.
You know
Oh,
that,
I know
right?
it does. Yeah,
I
I
have
signed
that
that.
sign. I actually
Yeah.
say, or you may be living in it. And I actually
Yeah.
have do not make cash deposits. I have that in there twice. So really it's only 9 things, Mike, but I have it as 10 because I wanted to round it out to 10.
Yeah.
And I put in do not make cash deposits. I put it in, and then I wrote in parentheses, yes, this really needs to be put in there twice because it's a
As
big
a
pain.
reminder, sure.
We had a case where Mike and I were working with a customer, and we were about ready to close, and then they checked the bank account at the end, and there was a couple of $1,000s that just kind of mysteriously appeared in the bank account. It was only a couple of grand too. I was surprised it wasn't like $10,000 or $20,000 or something. And the bank was like, "Where's this money from?" And do you remember the guy went to the casino and he won some money at the casino?
Was this my client?
Yeah.
Okay.
And he won some money at a casino. This is right when we first started.
Yeah.
And like 7 years ago, 8 years
you
ago.
basically say, well, where'd it come from? And then is there a paper trail?
And there wasn't.
There isn't.
There wasn't because he pulled the slot and won. And it
small
was
enough.
under the amount where you had to report it to the IRS.
Sure. So he just got
So
cash
he
in his
put
pocket
it-
and left.
We have these rules for like
Well, let me tell you
sourcing
how we solved it. Mike had to be sued. Thank God Mike used to be an underwriter because he
Ah.
tried to figure out everything. And then what happened was he was like, "Hey, do you have any receipts like the parking when you parked at the casino to show that you parked that day and that the next day you deposited the money?" And he showed, I think, that he bought a couple of drinks and he had a parking receipt for that day. And then the next day,
and we write a
he
letter.
and then he wrote a letter, and that's how he got it. But all that just because he deposited like $2,000 into his bank account right before he closed.
That's crazy.
And there's like thresholds for like depending on the loan program, but also maybe loan amount and or your gross income. Like what's the threshold for a deposit that we have to source versus one that we don't necessarily have to ask questions about.
Well, in this scenario, though, so you've explained over the years, and you can probably do it again quickly about seasoning cash, right?
Yeah.
So you can get money from relatives, right? You can use other money, but oftentimes when it's cash in a bank account, it has to be there. You call it seasoning, right? It has to,
So
you have to prove that it's been there a minute.
Yeah, the seasoning. What we're going to do is we're going to look at 2 months of your bank statements and any money coming into the account in that 2-month window. And this is like if you're moving money between checking and saving, very common. So I need both statements, right? So if you're pulling money from a 401k, I need to see the 401k statement. So 2 months of any of the statements that we require. And then we're looking for money that's coming in and then say, where did it come from? If it didn't come from your work activity, then there's a good chance we're going to say, hey, show me where this money came from. So I sold a car. Okay. Give me your bill of sale. Show me that you sold it for a value that was reasonable. Cash deposits, very difficult to source because you don't have a paper trail. And so then these rules are in place, a part of, the mortgage lending rules to protect against straw buyers, which is basically like, Johnny, my credit's terrible, but you got the credit to buy. So you're going to go ahead. You're going to do the loan app. I'm going to give you the money. Right. Or maybe it's protecting it against money laundering. And so it like 99% of the time, it doesn't apply. People, they come from legitimate sources, even though we can't source it. It's not illegal funds. And I explained it to people like, when you walk into like BJ's or Costco, like how many people are actually shoplifting from them, but they check everybody's receipt on the way out. Right. So it's almost like everybody's treated as if they're potentially doing something wrong, but so I don't like it for that reason, but The other thing I don't like is we don't care. Like you can launder money as long as you did it more than 2 months ago.
That's
Right?
nice.
Right?
Do it before we start tracking.
Are you a money launderer?
So
Right.
in
Now?
Jim's scenario,
Not right now.
Right.
in Jim's scenario, even if it wasn't money that was going to be used as part of the transaction,
Yes.
just that simple act of depositing cash before the closing kind of threw things off.
There's some nuance there, but once it's commingled, it's hard to, like, let's say that you dropped in 2000 and then 2 weeks has gone by and you've used money. Maybe you did some sort of deposit per the contract or something. It's like, we can't undo that commingling. So
Right.
I would say cash deposits is one thing, but in general, like, don't have any money coming into your accounts that isn't normal for you, right? If it's not like you get your paycheck every 2 weeks, right? Direct deposit, something like that, or whatever however you're paid, that type of activity is fine. It's easy to track.
Right.
It's the unusual activity. Not that it's suspicious, but it's just not normal. And then we say, okay, well, where'd it come from?
Why did this happen?
Yeah.
And it gets very frustrating when people have to go through that because they feel like it's ridiculous.
Sure.
But it's the process and you just got to go through it.
But that's why you give them the heads up prior.
That's why I have the top 10 things of what
and I
not
talk
to
to
do.
people about it, and we call it going down the rabbit hole of asset documentation, because a lot of people, especially people who like have complicated asset positions, like maybe they have their brokerage account and then they've got these other accounts and then they got business accounts and like they're just used to doing whatever they want with their money. Like, what do you mean I can't move it around?
Right.
Like, that's just how I do it. And it's like, yeah, that's fine, and we could document it, but don't get frustrated when I'm asking you for 2 month statements across your spectrum of assets, right?
Because of your norm.
And activity reports, right? It's like statement plus an activity report showing everything since the latest statement. So it can just be a pain for people, and it feels intrusive, very intrusive. So I try to minimize it, but you got to talk to them and make sure nothing's going to be a showstopper.
And this is just another reason to wrap up this one. This is just another reason of why you need to talk to them, your loan officer or mortgage company early, because let's say that you do what the guy that Mike just described, right? His multiple accounts, does it a certain way. Well, it might be easier for that guy for the next 60 days to do it the way that Mike wants him to do it. Yeah. And say, look, just for the next 2 months, do it my way, will you please? So we can get through this easy. But if you're coming at the last minute because you're one of these people that are, and there's a lot of them out there, I know I'm good for the money. Don't worry about it. I'll get to that mortgage application process later, right? Not good. Even somebody who's very well off and has multiple financial assets and everything, it might be even more important to come early for that.
And that can be sometimes the most frustrating because they're just not used to being scrutinized to that level. And they're like, well, everything's on the up and up. Why am I being treated like this? And
because they want to deal in logic,
sure,
right? And it isn't logic. We're not dealing with logic. We're dealing with standards that have to be met. And whether it's logical to you or not, it's the standards that need to be met.
And we have to, I can never lose the sight of, like, I'm in this every single day. So this stuff is old hat for me. I'm like, oh, I'm going to ask you for this. If I was sitting there with you, we'd have it knocked out in 5 minutes. But when they get a request like that, and it's almost challenging their character, right? We're kind of challenging their character, saying, well, you got to prove this. Like, I need documents to show that what you're saying is actually
legit,
true. Yeah. And especially if you have, let's say you have exemplary character, like you don't want to be challenged on that. It's frustrating and it's insulting. So you have to kind of navigate those waters,
right? And
carefully.
it isn't anything about judging you. It's
nothing
just
personal.
measuring it to certain standards that are across the board uniform, so that they can have. And what they don't understand is they can't really give you a break, because then that's kind of mortgage discrimination in a way. If you have a standard for one person and you don't have the same standard for another person, somebody along the way can go back to that company and say, hey, you didn't treat me the same way as the other guy.
And the other thing is,
right?
like,
So that's part of it.
Every lender is following the same rules. So that's the good thing too. Like,
it's
those
uniform.
guidelines are uniform. But you might run into somebody who says, oh, like, they don't look at things like I look at them, and it just maybe it just passes through to the underwriting level. And then all of a sudden the underwriter's like, wait a second, this ain't right. Like, what is, give me some documentation on that. And then once the underwriter's seen something, it's very difficult to unsee something that they shouldn't see.
Well, and the point we were trying to get to when we started this whole thing, which was a great conversation, that John is selling a house down here and he's buying a property. I forgot what city he's in. Is it Claremont? I can't remember. Come on, you're
Lake
doing the
City.
deal. Lake City. That's right.
Yeah.
Excuse me.
I'm glad. Listen, I don't retain that stuff, but I did for them. Just
by
we
the
talked about Lake City.
By the way, I talked to Daryl. You might want to give him a call.
Okay.
Yeah,
we've talked.
His other brother.
Oh,
Daryl.
Yeah, that's right.
Not Daryl, the other Daryl. The other
Daryl.
brother.
Got it.
Yeah, the other brother. Just go through a couple of the shout outs. Chris, I just wanted to say congrats to Chris. Mike is doing the loan for Chris. We put his house under contract last week, and then this past week, we got him under contract to buy his new home in Lake Worth. Now, it's a very interesting deal because we haven't gone into the house yet. It's a blind offer was what we turned in, a blind offer. We're going to be talking about blind offers later in the show to understand what they are, because there seem to be, from all the listings we're taking, we're getting more and more blind offers coming in, and sellers really need to know how to deal with these properly. A lot of agents don't know how to deal with them and understand the process as well as they need to, I think. So we're going to teach you a little bit about blind offers later. But congratulations, Chris, for getting into contract, and hopefully everything will go during the inspection when we get inside the house to actually see it after we've gone under contract.
Yeah, fingers crossed.
We also wanted to say congratulations to Tom. We put his house under contract, a condo down in Sunrise. We had the inspection this week. I think everything's going to go fine with that. Congrats to him. And let me see here. And let me see. Let's go ahead. I think it's time to take the break, Jimmy, right?
Sure. If you want to.
So we're going to take the break. On the flip side, what we're going to talk about is, we got so much to talk about. Johnny, I'm so glad you're here this week. I'd love to talk to you about what you think is going to happen with, now that people have to pay $1 trillion of student loan debt, right, coming up, and now it's going to be mandatory to get back into paying that. There's an article in the New York Times saying, is this what's going to break the economy? Is the student loan debt? And I was thinking about 2018. It's something we should talk about. Also, Mike, I don't understand what the heck is going on with the interest rates. I lost total control. I'm like Mr. Wizard when it comes to understanding what's going on in the market. I fell off the chart a little bit this week, and I don't understand what's going on. I hear that they're super high, but Freddie Mac is saying no. I don't know what's going on. We're going to talk about that too.
Perfect.
Okay.
Lots to get into.
Yeah.
And you're welcome to be a part of it. 877-927-6969. You can dial it right now. Jimothy will line you up. It's a 4-minute commercial break. Look, if you're not comfortable on the radio, I totally understand. I, as well, not very comfortable on the radio. That's why I prefer to just go to FloridaTalkRealEstate.com. The one-stop real estate shop that is a collective of pros. These are experts in their field. You get them all at FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com on Facebook and YouTube as well. But remember the .com. Know it, use it, love it, and share it. FloridaTalkRealEstate.com. We're back in 4 minutes. Florida Talk Real Estate right here. It's Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1.
For more information about contests on the station, visit realradio921.com/rules.
Here's the latest with weather on Real Radio.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. Mostly sunny with temperatures in the mid to upper 80s this afternoon. We'll see the chance for a stray shower through the second half of the day as temperatures return to the 70s overnight. Partly cloudy with a chance for post shower on Sunday morning.
This report is sponsored by Irish Spring, the fresh scent of Irish Spring. And those sensational Irish Spring suds are just the reset you need to own the day. Irish Spring. When the spring hits you, you're ready. Pick up Irish Spring at your local retailer today.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Here we go. Back at it on a Saturday. Great to have you with us. Thank you very much. 2 hours of infotainment is what we offer up. And thanks for being there to consume it. Johnny C., well, that's me. Our producer extraordinaire is Jimothy. How are you, my brother?
Very good, thank you. Good morning.
Good morning. We do got a toll-free number. If you'd like to speak with Jimothy, get on the air with your questions, comments, concerns in the world of real estate. Dial it up, 877-927-6969. Because we do have the team always assembled to handle all of your issues and more. Of course, if we can't get your answer on air, we will absolutely get you to that very important answer off air. Mike Rauch, the mortgage guy from the mortgage firm, is with us on a Saturday. Nice to see you, Michael.
Nice to see you. Yeah, I'm with you.
Thank you very much.
With everyone.
Yeah,
Good morning.
You're here with us. And Jimmy D's here, too. That's Jim DePola. Told you for 11-plus years now he runs a top-producing Keller Williams team. It's the Florida Home Pros team, Keller Williams Innovations. Hello, Jimmy D. How you be?
Happy South Florida.
I'm my man.
I'm going to be a pretty busy morning after this. I got to go show a couple properties on Lake Worth. So that'll be a good day. Man, I tell you, last week was crazy, though. One day I was up in all the way up in Fort Pierce working on one of our listings, by the way, which we just put on the market today. I guess I should talk about that. Nice. We don't have the open house set up for it yet, but we have a really nice 3-bedroom, 2-bath home up in Fort Pierce. This is in a really great neighborhood that's pretty east in Fort Pierce, and we're probably 1.5 miles away from Toes in the Intercoastal, 3 miles away, 3.5 miles away, about an 8-minute drive, maybe 15-minute bike ride to get to the beach in Fort Pierce, 1103 South 8th Street. 3-bedroom, 2-bath, 2,300 under air, CBS home, built in the 1950s on a super large lot, and almost a half-acre lot. I want to say, but compared to the neighbors, pretty large lot. Really nice vegetation landscape. Really feels like an old Florida home. It has wood beams and a couple places the house wood ceiling beams and things like that. Very upgraded. It has a newer roof, newer kitchen, some newer flooring. Still needs a little bit of more work to finish it off. Really nicely priced at $390,000. So check it out. All you got to do is go to floridatalkrealestate.com and look for the property. You could go on Facebook, Florida Talk Real Estate LLC. See the property there. If you're interested, give us a call. If you're a realtor, give us a call. We want to sell the house. So
perfect.
Nice.
Look forward to it.
I heard a little real estate speak in there. I heard newer. It reminds me of like cozy.
Yeah,
Right,
well,
right.
newer
What
in
does
this
newer
case
mean,
is I think it's
Last
within
5
the
years?
last 3 years.
Okay,
So this is
yeah.
really
So new.
newer. Yeah,
Yeah.
yeah. I don't want to say new
Not brand
because
new.
it's not brand new, right?
But it's new.
It's newer.
Newish.
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 But anyway, I was
Basically
up there.
new.
It's
I was up
basically new,
there in Fort Pierce, and then I found out that a realtor in Hallandale Beach could not get into my house because the lockbox wasn't working.
Huh.
So I had to go from Fort Pierce down to Hallandale Beach that day.
Oh.
And of
There's a
course I
ride.
was ending in
I'll be there
Hallandale
in a
around
second. Hold
5
on.
o'clock. Yeah, I'll be there in 2 minutes, right?
Yeah.
And I knew I was going to be getting to Hallandale Beach right around 5 o'clock. And I know what Hallandale Beach is like around 5 o'clock. And I'm like, oh my God. And I get down there and I get to the overpass, like the underpass or overpass or whatever, one of the passes, one of the type of passes. When I'm trying to get to the house I'm going to, and I see all these police vehicles and everything, something's going on under the underpass, right? And when I get
Under
back,
the underpass.
under the underpass, right?
Whoa.
And when I came back, 0.7 miles, 1 hour and 20 minutes to go 0.7 miles. And then I had to go from Hallandale back to Jupiter, right? So that day was holy heck day. It was a very crazy day.
Yeah,
and then when I get there, the lockbox didn't work. I had to have a hacksaw and hacksaw the lockbox off so I could get the key.
You just happen to have a hacksaw?
No, thank God the owner was there and he had a hacksaw.
okay.
But I was like, I need a hacksaw. And he's like,
Wow.
I got one.
I got a hacksaw.
So that's all it takes to get into the lockbox? Is a
Hacksaw.
No,
huh?
actually, that just got the lockbox off the
Off.
door, but
Yeah.
it didn't get us the key, and we're never getting that key out because it's made out of a stainless steel.
You can't get the box.
You
open.
could take a heavy sledgehammer. You're not. We drove it over. We drove it once with the 350, Ford 350 or F350 or whatever. Nothing.
Hmm.
Yeah,
Mhm.
just you can't. You're not getting the key out anymore. It's
Yeah.
over. So anyway, that was kind of a crazy time, and I had to do that because we had an appraiser coming the next morning, and so I didn't want to go in the morning and fight the rush hour traffic the next day.
Yeah.
So that was a crazy day. But
Man, that is terrible luck.
but people
What's
wonder.
the lesson there? You got to make sure your lockboxes are working.
Well, this
Somehow.
one was a freak accident. It got jammed up. It wasn't anybody's fault because I was kind of upset with the rails. I was, what do you mean the lockbox broke?
How
I've been
did you
doing this
break it?
12 years.
Right.
It's impossible to break, and
Yeah.
I don't know what the heck happened. But
That sucks.
but point of the story is hint hint. I go all the way from Fort Pierce down to Hallandale Beach.
Yeah.
The Florida Home Pros and the show, Mike does statewide in multiple states, right? Trident Title statewide. We're kind of statewide. We do stuff all over the state using our network of agents. But the Florida Home Pros specifically does Vero Beach down to Dade County. So if you're hearing this on the radio, yes, we cover your area. All of us on the team, everybody. There's not anybody. Ross Camarones from Brightway Insurance does the state. So we're
But if
statewide.
you are looking to, relocate somewhere else in the state, I would definitely reach out to you and be like, who should I be working with, Jim?
Yeah,
Because
because
you can help vet.
yeah, and we can take that whole team and work any part of the state and
That's
give you
it.
the same results as you get as if you were down here.
Just-
Down here. To me, it isn't down here anymore. We really are statewide. If
Yeah.
you want to do anything statewide, and really out of state too, but statewide for sure.
You're
Out
kind
of
of like
state,
an everywhere man.
well, yeah, because out of state, so we don't have, and just to be real, we don't have the title company, we don't have the insurance company because those are specific to Florida. But Mike can do many states out of the area. And
Colorado, go Buffalo.
Yeah, go Colorado, South Carolina, right?
Yep.
Tennessee.
Yep.
Virginia.
Yep.
Georgia.
Yep.
North Carolina?
Nope.
No. Okay, you got to get that because people go in there.
Do you ever have Alabama?
No, but you have
No.
more than that. Not Texas, right?
No, I think you named them all, Jim.
Wyoming.
No.
Your dad?
Nope.
No?
Nope.
Oh, okay. Just trying to think. I feel like that's
the-
you would know more than me. That's everybody.
I think that's it. I don't know if the mortgage firm is even in Wyoming. So the
Oh.
mortgage firm, number one, has to do something to get registered in the state. So, and we're probably in, like, I don't know, 40 something of the states. And
Which
then
is a pretty big deal because when we started, you were in like 6.
yeah, I think it was just like Florida, like kind of moving up. So yeah, they've slowly expanded as needs require. And same thing for me. So if I had an opportunity to do a loan in a state, it makes sense to do it, right? Because I have to go through a little bit of education, pay their licensing fees, and then every year you have to kind of do something similar. But it's always made sense for 1 or 2 loans, right? Like no big deal.
Sure.
So that's how I've kind of broadened that. So
Very
I haven't
cool.
had an opportunity to do anything in other than the states that I'm registered in.
So
Yet.
give us a call now.
FloridaTalkRealEstate.com.
So in the Hallandale Beach property, the owner of that property went into contract this week, and we turned in what's called a blind offer. And I've been getting a lot of blind offers with my listings lately, a lot. Now, normally so let me give you the definition of blind offer. A blind offer is when somebody turns in an offer without seeing the house at all. They haven't gone into the house. They've maybe checked it out on the internet, maybe.
Is it PC to say blind offer? Can you say that?
Oh, I don't know. What is it? Visually impaired offer?
Yeah. Visually impaired.
Just a sight unseen.
Sight unseen, yeah. So with these blind offers, first of all, you have to be very delicate with the sellers when you deal with these blind offers because there's a lot of pitfalls and pratfalls with this, okay? And not just about whether the blind offer is good or not, okay? So it's very common right now that I'm seeing investors who typically go after the houses that are in disrepair or been on the market for a long time, and then they go in there and they turn in these very low offers. So let's say your house is on the market for 400, and they haven't even come look at the house, and they're offering you 270 for the house or 320 for the house, and they're expecting you to drop 20-30% off a list price, and they turn it in. It takes them 15 minutes to write the offer, if that much. And they don't even think about it. They just send it to you, and then they wait for your response.
And they're also like shotgunning offers most of the time, right?
Most
like
of the
they got
time,
multiple offers happening at the same time.
We're usually trained to do at least 25 offers a week when you're a full-time investor, to look for properties that you're writing at least 25 offers a week, 100 a month.
Yeah.
And you'll probably get 3 to 5 deals out of those 100 offers that
So
you
you're
can
just
work
throwing
on.
the lure out there. You're just fishing away.
That's all you're
Fishing
doing.
away.
But the problem that you have with these blind offers is when you have these super low offers, and you get them right when you put the house on the market, usually, right? So we had a couple this week because of the houses we put on the market, right? And as soon as you get them, they're very, very low. And then you got to, as a realtor, you have to respond to that offer. You can't ignore it. Oh, 270 on 400. You can't just ignore it and throw it away. You have a responsibility to present that offer to the seller.
You
even
can
though-
also use it when you're talking to legit buyers. Be like, we have multiple offers.
Well, yeah, you could do that. But what happens is a lot of times the sellers go into despair and anger because they're like, what? Somebody just turned in 270, and they don't understand that it has nothing to do with the house, it has nothing to do other than the mechanics of making an offer, right? And that you could as easily reject this offer with the same effort that they use to write the offer and just forget about it and move on. That's what I recommend people. This is just like a floater out there, just swat it away. Don't even think about it. Don't dwell on it. But some people, it's like, oh my God. And they start thinking, are these the kind of offers I'm going to get? And it turns into a big deal.
I could see that.
So, and the investors have no clue about that. And the investors are getting worse and worse because they're getting more sophisticated. They're using a lot of the tools that realtors use to try to find business. The investors are doing that. So now they have all these drip campaigns and texting campaigns. So after they turn in this crazy BS offer that they've never looked at the house, didn't do anything to analyze the house, and now they're bombarding you with the emails and texts saying, can you respond to our offer? Can you respond to our offer? Even though I presented the offer to the seller has rejected. I've responded back to that offer and said, offer rejected, right?
You're still on
I'm in the drip
auto.
campaign. So now I know how everybody feels. If you go on drip campaigns, it doesn't work right. So you can laugh about that. But the thing is, so that's the first problem with the blind offers. The second problem is if you have an agent that doesn't understand how to work with blind offers and you're selling your house, you can get in a lot of jam up problems with the blind offer if you decide to take that offer.
I would say agents who aren't super experienced might have similar, like the emotional response to what you said the owners would have, where they're like, oh my gosh, is this the kind of offers we're going to be getting? Is this, because if they're not doing a lot of listings, it can stir that similar kind of like unease and uncertainty about where did they price the home, right? Is it actually going to sell at this price?
Exactly. And the other thing that could happen is they get itchy that they want to get the deal done. So they actually start working with this blind offer as if it's a legitimate offer.
Yeah.
So I had a guy 2 days ago, Nick, who called me up on 1103 South 8th Street up in Fort Pierce, and he wanted to turn in a blind offer. And that guy was super professional, right? Well, he sounded super professional on the phone.
Yep.
And he was like, hey, we're going to be turning an offer. And I go, great. I just want to let you know that our showings aren't going to start. He told me this on Thursday. I go, showings aren't going to start till Saturday. So go ahead and make the appointment. If you want to turn the offer in early, no problem. But I'm not going to, I will submit the offer, but say it's a blind offer and recommend not taking it unless you go out and look at the house. So I've already, and when I take listings now, I sit down and talk to the sellers about blind offers and how we're going to deal with it so that it kind of, when we get those shockingly low offers, they don't freak out about it because I told them before it was going to happen before it even happened. The other thing I do is I say, can you give me permission to just handle those kind of offers until they get to a certain price? And at a certain price, then we're definitely going to be talking serious about the offer. So, Nick kept trying to say, well, we're going to submit the offer, He
wants to get in before.
Yeah. And I said, look, do whatever you want to do. I have a responsibility to submit that offer to the seller, but I'm telling you the process behind the scenes. We've already talked about it. The seller told me, don't accept blind offers. So I'll turn it in. I'm going to say it's a blind offer and they're going to reject it without a counter. They're not even going to counter on the price or anything, because it's blind. Well, Nick made the appointment today to go out and see the house.
Okay.
So that tells me that his investor is serious because people are going out to look at the house.
Yep.
Now, does that mean that they're super, super serious?
Serious
No,
enough to go look.
but they're serious enough to go out there and they want to see the property. So that gives me a little more comfort knowing, or confidence knowing, that if the offer comes in, they took the effort, and that means that they still wanted to turn the offer after they saw it.
Yeah.
Right. So really important to understand blind offers. The other thing with blind offers, sometimes what I'm doing now is I'll tell the blind offer, I'll counter back at the price that the seller wants for minimum and say, if you give us this cash with 0-day inspection period and you're going to close in 21 days or less, we'll consider the blind offer right now. And then they send a message back. It's like, well, no, I need time to see the house.
Well, that's
and then I respond back to you as well. Thank you for wasting my time of making an offer without seeing the house. Come look at the house. That's my point.
I was going to say that's because when you're the professional investor, they're out there, shotgunning offers. They also don't care about getting into contract and paying for an inspection, because that's the moment where they really decide if they're going to make the money that they thought they were going to make on the home. And for the homeowner, the seller, like once you're in contract, you're expecting that to close and you're starting to plan your life based on the close date and everything. And for the investor, they're like, I don't even know yet until my inspection period. Right. And which is the same for regular buyers, but the intention, like the investor will walk away easy. Right. When they'll calculate numbers and say, wait a second, I'm not making what I want. Okay, cancel the contract.
Exactly.
Whereas
and they don't have
like normal buyers are like, can we figure out how to make this work? They want to negotiate,
trying to live here.
There's no emotional attachment with an investor. That's how I describe it. It's a pure business transaction. So if the numbers work, they're going to do it. If the numbers don't work for them, for their business model, they're not going to do it. and they're not going to think about it. They're not going to go, darn, I didn't get the house, or have any emotion. It's like they're going to be going, glad I didn't buy that one, right? But the seller, you're right, Mike, are so many times counting on that closing and upending their life with the plan that they're going to be closing soon. So that's the first thing. And also, when you work with retail buyers, it's complete opposite of that. They have to spend an hour, 45 minutes, an hour putting the contract together to decide on what they're going to turn in for the price. They got to figure out how much deposit, inspection period, all this stuff, right? And they're really thinking about it for the long play. And they're not thinking about, can I make a profit on this house? They're thinking like, is this house good for me, my family?
Right.
And can I afford it? And am I not getting ripped off? I don't want to buy a lemon. That's what they're more worried about. So as long as the house appraises and inspects, retail buyers are satisfied with that because they're looking for a place to live. They're not looking for sometime quick flip. The other thing with blind offers is assignability, and most people don't know what assignability means. In fact, Jimmy, how many blind offers did we get on your house? We got a bunch, right?
Blind. Trying to think.
I think we got a bunch.
A couple.
Yeah, we got a bunch. And I was telling people, don't even write them, and they were still writing them.
Yeah.
But Jimmy was getting blind offers too. It's just a function of the market today.
And that's exactly what you said. You told me ahead of time we're going to get them, and can I reject them right away? And we did, and it worked out, very well.
Yeah, it worked 4 days, right? I was slacker. I keep slacking up 4 days, sold the house, right?
Not even. You're out of days.
So yeah, so the thing is the other thing is assignability in blind offers. I just want to wrap up blind offers with this, right? So assignability. Most people don't know what assignability means, but assignability means flippability. Okay, so actually in the as-is contract,
I thought it meant like what Johnny used to do in school, like back in his younger days. He had the ability to know the sign of the female that he was chatting up.
Exactly.
Right? He had
assignability. We know the astrological
I went to the
sign.
Capricorns.
Yeah, there you go.
To him,
astrological sign ability. Is what he had. Right? There was some movie where the guy, like, maybe it was one of the police academies where he had like change in his hand and he would walk up and he'd be like, Capricorn. Right? You don't remember that?
What was the deal with the change in the hand though?
Just making like maracas.
Making noise.
Like maracas.
Okay, yeah.
Sell it.
There's only, 8 of those movies?
Yeah,
exactly. One of the early ones, because I probably stopped after 2 or 3. Police Academy, great movie.
So
They were out the gates, weren't they?
Yeah.
With the assignability, that's basically saying, is this contract flippable or not? So I want people to understand about this because sometimes the agents don't even understand assignability, and they should. Okay, so in the contract, there's 3 options for you for assignability: may assign, may not assign, or may assign but not be released from responsibility, right? So what does all that mean? Okay, so assignability is flipping it. So let's say I go to Johnny, I go, hey, Johnny, I'd love to buy your house for $300,000. Now in my mind, I'm thinking it's worth 400 fixed up. I'm just making up a number. And then Johnny goes, you know what? I'll take that $300,000 offer, and we sign a contract. Now I have a contract with Johnny that allows me to buy his house for $300,000. Now, a lot of times when I'm an investor, I'm not going to put in a 5-day or 7-day inspection. I'm going to try to put in the longest inspection period that Johnny's going to give me, because what I'm trying to do is not buy Johnny's house. I'm trying to flip Johnny's house without owning it. And what I want to do is I want to have the longest inspection period possible so that I can go out and market Johnny's house to other investors to see if somebody else will pay more than I've paid under Johnny's contract. So
even if it's 10 grand more, right?
Oh, wait,
that's
no,
great.
that's not even, Johnny. You're not even thinking right. So I have a 300,000. So I go out to the world and I go, I have a 300. I don't say I have a 300. I have a house that's worth 400,000 fixed up. Who's going to give me 320? Who's going to give me 335 for this house? Right now, these numbers are a little tight. Investors that are listening to this is like, who would buy a house for $335,000 on a $400,000 after repaired value? But just to play around with me, right? So who'll give me 335,000? And somebody says, I'll give you 320, and another person says, I'll give you 322, and Mike goes, I'll give you 325, right? And then I go, sold, right? So I go, Mike, give me $25,000, and I'm giving you my $300 contract, and you close with Johnny.
Yeah.
Now, If I clicked may assign with no responsibility,
you're done.
What that means is if Mike doesn't close with Johnny, Johnny can't come back after me. Sorry, Johnny, I got my 25,000. Okay. But
so you don't get that at the closing. You can
you're trading paper.
Damn,
so
okay.
you're paying for the contract I've already signed, and you're coming.
So I won't
to
assign it to you until you give me my money.
Yep. And then
give this man.
And then so that's without responsibility. Now the other way to assign is I say
assign it, but you're not released from
right.
your...
So if Mike doesn't close with Johnny, then I have to step in and close. And if I don't, I would quote lose my deposit. A lot of times the deposit will be less than the money that Mike gave me.
Right.
I might end up making money anyway and say, see you later, Johnny. And and Johnny's in deep doo-doo now because he doesn't have his house sold. Okay.
Right.
Now the third option is may not assign, and that's what we always want. Almost always, I want in my contract
as a seller,
even with an investor. Even if I know you're an investor, Mike, and you're buying my listing, I'm going to ask you to put in may not assign.
Right.
Because if you want to flip it afterwards, you want to do whatever
right. It doesn't
you
mean
want.
I can't make money. It's just I can't do it during
right
before I
want you to close.
Yeah.
You close and then you do whatever. Then you own it. You do whatever you want.
Yeah, your scenario isn't totally tied into this scenario. This is going to happen, and then you do with it as
you do
please.
what you want. After you own it, do whatever you want. Go knock yourself out. Now, Johnny is in a very vulnerable situation if he doesn't understand or his agent doesn't understand assignability. Because a lot of people, a lot of agents will put down may assign but still have responsibility. And I don't even understand why they would put that in there unless they were really flippers. But even agents for retail buyers sometimes will put that in there. And I'm like, why? Why do you need that? You know, it's just not even needed. It's just an extra thing to be concerned about. Let's wipe that out right now.
Right.
So look, blind offers are more, the point I'm trying to make on this, just to wrap it up, blind offers super common in today's market right now, more and more common. One of the trends that I'm seeing, this isn't based on real statistics. This is just my opinion, in my opinion, humble opinion, is that we're getting a lot more blind offers on retail houses, right? As soon as it comes on the market, even though the house might be in great condition and it's priced right and everything, people are just coming in and investors are coming in and just turning in blind offers anyway. And why do you think that's happening? No inventory. There isn't a lot of houses to put offers on. So now they're trying to go into that residential retail market and trying to see, well, maybe Mike will take my crazy number.
Sure.
You know,
well, because you never know who's on the other end of that text or email who could be in major financial straits and going, man, I could use that.
Yeah, also, much like Johnny's dating life.
Yes.
Like you ask 100,
yeah,
and you're like maybe half of one would
half of one
bite. Yeah. Statistically,
you're saying there's a chance.
Half of 1%.
Yeah, you're saying you got a chance.
After 100, you get one. It's a win.
But after about 50, you're like, I got a question for you. Is this rag smell funny to
you? So
I was going to say
it's a joke. Don't email us.
As long as the investor is buying it, low enough below market value, they can turn around and sell it for profit.
Yeah. Yeah.
So that's the offer is always going to be way too low.
Yeah. Most investors are going to turn in an offer usually about 65% of what the house is worth fixed up after it's fixed up. So
what about these ones that don't need fixing?
There's maybe they'll do 70, maybe 75%, but probably not. 70% would probably be the max. Okay. And that's because most of the time that's what a hard money lender is going to give you. They'll ask you to put 30% down if you do hard money, right? So they're going to ask you usually to put 30% down so you can finance 70%. So they'll do 70%. So just understand blind offers. They're more common. I think it's because of the lower inventory. They're just trying to, like everybody else, trying to find opportunities out there. Don't fall prey to that. You have to understand what investors are looking for. Investors can be a very valuable tool for a seller that's houses in disrepair and they need to sell fast. But you have to understand that if you do that, you're losing potentially a lot of money. And you can actually save some of that money if you really know what you're doing. And my other advice is don't go up against one of those we buy houses fast for cash kind of companies by yourself.
Yeah.
You're probably going to lose way more money than you need to, you're always going to have to sell your house at a discount. But in that situation, because they got to make a profit,
Of course.
but how much profit they make, that's where you need a good
control it.
negotiator
Sure.
to come in there, because there's ratios they have, and there's a certain point that they'll do it up to, and that's the number you want to try to get to. Is
And
that number?
You have to expect that they're shrewd and sharp and on their game, and so you even if that's like your general personality, you just don't know enough about it. So you need a professional.
You really need somebody to
knows?
help you walk through it, because
Yeah.
you could be losing, even though that you might be getting what you want. Fast sale, don't have to fix anything up. You still have equity in your house, so you're still getting a nice paycheck. But wouldn't it be nice to make an extra $10, $15, $30,000 extra just by making sure that you understand your numbers correctly so you can negotiate correctly?
Well, in every scenario, I mean, ultimately, if you're selling a home, you want to get the most for the sale of your home. Even if it is a scenario where you're like, I got to do this fast, and I'm going to go to an investor, and I know I'm going to give them a discount. You still want the most. You can position yourself with the best of the best. I got a team of pros, and you can get them all at floridatalkrealestate.com. We've dubbed it your one-stop real estate shop for a reason, because you get a team. They work cohesively together. I've experienced this team. Jimothy has experienced this team. So many listening right now have. If you are looking to buy a home, sell a home, you're stuck with a home, you don't know what to do, and everything that involves real estate in between, remember floridatalkrealestate.com. On Facebook and YouTube as well. Know it, use it, love it, share it. It's floridatalkrealestate.com. We got to talk interest rates. We got to talk student loan debt. What else are we going to get into?
Whatever we can get into with the time allows. But this interest rate and what's happening in the market, I think it's really good stuff to talk about, because, man, it's very I feel like it's very topsy-turvy right now. Do we want to go ahead and take the break, or want to take the caller?
It's your time, my friend.
I think we always take the caller, Jimmy.
Sure,
Is that
we
all
can
right?
do that. Yeah, we have Angel on the line, and Angel has, it's a question about credit, but I'll let her pose the actual words. Angel, welcome to Florida Talk Real Estate.
Good morning.
Hi, I have a piece of property in Vikings Prairie, and I was going to ask, once you spend money, like, does it affect your score if you spend a lot of money and once you buy, like, those Tractor Supplies gift cards or whatever cards they call them?
So I'll say this, like, your credit score will be impacted, number one, by the amount of credit that is issued to you.
Mm-hmm.
So the more credit you have issued to you, like the limit, I would say the better, right? So if you have $1,000 of revolving credit cards issued to you, that's good. If you have 10,000, that's better, right? That you can tap into if you had to. But then the nuance there is, like, how much of that credit limit have you used? So what's your utilization? And say 50% as an example on $1,000 card, if you had a $500 balance, that would be 50% utilization. So the golden zone, I talk to people about report cards all the time. Like, you want A+ on your report card, not A's, not B's, not C's, right? A+ is 10% utilization. So if you have a $1,000 card, you want the balance to be $100 or less. And timing wise, you want it to be that when they report to the credit bureaus, which is when they generate your bill, not after they generate the bill,
right?
Before they generate the bill. So when that data goes to the credit bureaus, that's when you want to be at 10%, and then you're going to have an A+. And so the more credit issued to you, the better, and the lower the utilization, the better. That's on revolving. Now, when you mentioned the
Tractor Supplies gift cards, those cards that you see in the stores, does that affect as well?
I don't think so. I think those are just regular gift cards, and so there's no credit check. They're not issuing you credit. There's no risk involved. So it's not a credit, something that would show up on your credit, right? 'Cause you're paying cash for a gift card, and then you can give that to somebody or use it.
But you're talking a gift card, right? Not a credit
card
line at the store.
You had a Tractor Supply credit card,
Yeah, so that would be a revolving credit card, something that you can use and pay back, distinct from an installment loan, like an auto loan, right? Or if you bought a tractor from Tractor Supply, it's probably on an installment loan. And the installment loans, the utilization isn't important. What's important there is just payment history. Do you make your payments on time, right? And that balance will go down slowly over through the years, and it has an expiration or an end date. So the revolving credit is definitely the one where you want to make sure you're following that 10%. Some people are at 80, 90%, and you can't easily get down to 10. So I would just say chip away at it, 90, 80, 70, 50 as these goals every month. And then the mentality shift, if you're trying to optimize, right? Like I want my A pluses. So if I'm optimizing, I want to get to 10% and leave it there, right? And you need to do that with as many cards as you can. So
does that answer your questions a little bit?
Yeah, but I was also going to ask, what are the do not spend and spending money when you buy a piece of land like that, like elsewhere?
As it relates to credit, if you got a loan to buy that land, simply make your payments on time, right? That's going to be some sort of installment loan. Make your payments on time. That from a credit perspective. From a like, how does that impact me on qualifying for another home? If you have a monthly payment on it, it's part of the and Ross would laugh at me. It's in the D side of the debt to income calculation, right? So it's a monthly debt obligation that would have to be considered. So my other piece of advice for people who are using revolving credit is to, if your goal is to optimize credit, you have to shift your mentality. You can't use those stuff. You don't want to buy stuff with it, right? You want to use it strategically to maximize your credit score. So that means instead of paying your bills with the credit card and then paying it off to get points or whatever, you switch it up and you buy like a sandwich once a month, right? And keep that balance super low. So it's just like
buy once a month a air rifle thingy.
Sure. Yeah.
Sounds paid off.
Yeah, a little airsoft.
Or some like Matt Damon in Good Will Hunting. Just go have some caramels, you know, something like that, right?
You like
whatever you want. Yeah.
What are you farming with that tractor, Angel? Corn?
Camouflage one, the Model 35.
Oh, that's perfect. So what are you farming with that tractor?
Just usually, if I were to buy one, I would just cut my grass. I have a property in Viking Square area.
Boom.
All right.
In the Viking where?
We could bring goats back in. You could just get a few goats.
No.
Save
some money.
That's in Okeechobee.
Oh, it's in Okeechobee? I haven't heard of that area
Viking
before.
Square.
Viking Square? Yeah, I have to check into that. I always like learning about new cities in Florida. There's so many. Do you know we got like 67 counties?
That sounds right.
We have 67 counties. So we have something like 40 something cities just in Palm Beach County.
Yeah, that'd be a challenge to name those.
Yeah, no way. I could never do it. There's some of those cities.
If I wanted to buy another property like that, but with a farmhouse and a barn, are the value prices still up, or is it the same?
So, well, first of all, the Okeechobee area, the prices are very affordable compared to other parts of South Florida. Okay, South Central Florida, if you will, south on the south end of the lake. But the prices haven't really dropped. We actually had a market report come out this week, which we're going to talk about at the 10:30 part. The prices haven't really been affected as much as you would think. In fact, year over year right now in Palm Beach County for a single family home, even with these crazy high interest rates, we're still up 7% compared to a year ago today, right? A year ago today, our interest rate was, I think, like 1.5 less.
That's crazy.
Than where we are now, and the prices are up compared to a year ago.
Well, but I guess appreciation slowed a little bit though, huh?
Well, it did, but we're off the peak. You know, we're off the peak by about 3%, 4% off the peak, but we're still up there. So if you're waiting for the prices to drop to buy, that might not be the smart move. It might be better to lock in what you're trying to buy, because when the interest rates do drop, prices are going to go up for sure. And when that happens, you're going to be paying the higher prices of tomorrow plus the higher interest rates of tomorrow. It's probably you're going to get a lower interest rate, but you're going to pay more for the house in the future. So it might be better to buy the house now, pay the higher interest rate while you're waiting for the rates to go down, and then refi.
I think you were right the first time. I think you nailed it. Higher higher.
Yeah, right now it is higher.
That's
I
basically what we've seen so far.
I think you
I don't
nailed
think
it
it's
the first time.
sustainable.
it can't
no,
be.
no.
We're in a weird, I said, defying gravity market where what goes up must go up.
Pretty much.
There's no down yet. But thank you so much for taking the time. If you have any questions, leave Jimothy your information. We'll call you on Monday.
Always remember FloridaTalkRealEstateIs.com as well.
Yeah, I hear you guys are also on YouTube.
Yes, we are. We're on YouTube and Facebook Live.
Yep. You can go ahead and stream us right now if you're interested.
And then you can catch it as reruns later if you want.
And why would you?
So
not?
Why would you
get
not?
on my Android tablet, look up your real estate home show on YouTube.
Yes, Florida Talk Real Estate. Yes, you can.
That'd be great.
We have over 500 episodes there.
Lots to consume.
Ooh, that's cool.
There you go.
Well,
thank you for being with us. I hope you have an awesome weekend, and don't be a stranger. You join us anytime.
All right, I'll just leave my number. What's the real estate guy's name?
Jim.
Yeah, Jim. We'll get your number to Jimothy here. We'll put you on hold there, get some information to you. But yeah, Jim DePola and the entire team of FloridaTalkRealEstate.com.
My number, just in case,
Yeah,
awesome.
561.
No, just
like
hold.
that, I want to learn more of the value of every property.
All of them.
Sure. We'll go over what's happening in the market in the area you want to buy for sure.
Yeah, because I bought a piece of land. I remember when I saw it and I bought it when I was 20 years old.
Awesome.
That's so cool.
That is awesome.
That is pretty cool.
Yeah.
To be a landowner at 20, that's pretty cool.
You know what I was doing at 20?
Yeah, getting in trouble. Me.
Nothing close.
Yeah.
That's for sure.
Well, thank you so much. We got to take a break. So
Appreciate
we're going to
you
get
very
going.
much.
Okay.
We'll do this little reset. We got a toll-free number, 877-927-6969. It obviously works. You're welcome to join the program with your questions, comments, concerns in the world of real estate. If you're not comfortable on the radio, always remember FloridaTalkRealEstateIs.com, your one-stop real estate shop. It's FloridaTalkRealEstate.com. 4 minutes from now, we're back at it. It's Florida Talk Real Estate right here on Real Radio.
Because your pets are pretty lonely when you're gone. Tell your smart device to play Real Radio 92.1 on iHeartRadio.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
877-927-6969. Got about 40 minutes or so remaining on this Saturday. 2 hours of infotainment is what we offer you every Saturday. Thanks for being with us. Johnny C., that's me. Jimothy's our producer extraordinaire. What's up, my brother?
Hello, and good morning.
We learned during the break that Jimmy D used to do his penalty kicks lefty in soccer.
No, righty.
Oh, wait a minute. Hold on.
Yeah, because he's lefty, and it was remarkable.
We went the other way.
Yeah,
I'm the righty.
Yeah.
Shooting pool lefty.
Okay.
So I'm shooting pool during the break, and Mike's like, well, you're doing it wrong. You're shooting lefty.
No offense. No offense to the lefters out there.
Yeah, I'm a right-hander, but I shoot pool left-handed.
It's just the way that you were striking the balls made me think you had a handicap of some sort. Like you're
a handicap, yes. Definitely. And if you've ever listened to the radio for years, you probably assume that as well.
Yeah.
Yes.
We also learned during the break that Johnny is a switch hitter. So you go both ways.
I go both ways.
You always have.
Always have.
Mhm.
Yeah.
Yep. Always have.
Nice.
That's why I'm a fan.
So it's the first time. Since the first time I dug in. I've gone both ways.
That's what I hear.
That's right. Mike Brown, the mortgage guy from the mortgage firm.
Yeah.
Now you're not ambidextrous in any way?
No, not that I could think of. No. I'm trying. I'm like, no.
I mean, the left isn't a deterrent. Like you can do things lefty.
Yeah.
But it's just you don't.
I would be uncomfortable shooting pool left-handed.
You don't predominantly find yourself doing something lefty.
Yeah.
So like we were talking about, my grandpa, right-hander, learned how to
golf.
Learned how to golf on left-handed sticks.
Yeah, I'm trying to think of something that I'm much more comfortable left-handed. I guess maybe certain things when I'm driving, right? You know?
You ever sit on your ham to make it go numb?
No.
Jimmy D is with us. That's Jim DePola. Runs a top
You
producer.
used to sit on your hand to go.
That's how I learned.
numb on
That's how I
purpose?
learned to go ambidextrous.
Oh, I didn't get what you were saying. I'm like, why would you do that?
It's called the stranger.
Danger.
Why do I know that? Listen, folks, I have sat in
Google,
front
'cause
of a
you're a
computer my entire adult career. I have sat in front of a computer, so
Understand.
and I retain stuff. So yeah, I know things like
Nice. Well, you're smart like that.
Send me those sites.
Where was I?
I got
Oh,
one
that's
for you,
right.
too.
It's Keller Williams. Florida Home Pros. That's right. Jimmy D, how are you?
It is.
So
it
you're
is.
kicking right. You're a lefty, but you did your penalty kicks
I kick
righty.
I kick righty. I bowl right.
You bowl right.
I bowl righty. I kick righty. I can kick lefty, but if I had a choice, I would kick righty. And then what else? Golf righty.
Golf ready. How about batting? Like baseball?
Lefty.
Yeah.
Lefty for sure. Yeah,
too.
I couldn't bat righty. I couldn't.
We're very similar.
Well,
I
that's
throw
pretty wild.
right-handed. I bat left-handed.
Yeah.
But shoot pool left-handed, but I'll golf right-handed.
Oh, that's so
and
wild.
what-handed are you?
That's the weird part.
What do you-
Golfing righty, but batting left.
What do you
That's
write
pretty
with?
wild.
Right hand.
You're right-handed.
I'm predominantly right-handed. Yeah. but and I would kick with right foot, but I'll bat left-handed.
Huh.
That was a weird one when I was a kid.
Yeah.
And they tried getting me out of it too.
I guess
they
it's all
tried to make
just-
me bat righty.
So what's weird to me is Jim's lefty, but yet picked up the bowling ball with his right hand the first time.
Yeah.
Mhm.
So like that's
That's
just
weird.
Yeah.
Your strong hand is your left hand?
Yeah, he's left-handed.
Huh.
I am.
There's
Yeah.
a pitcher out there that throws both hands.
Really?
Yeah.
That would be pretty interesting.
Yeah.
I'd like to
I've
see
seen that.
So
Who
he's
is
like,
that?
the
Who is
left-handed
that?
batter is coming
Yep.
up and he's throwing them lefty.
Yeah.
I wonder
and
if it would
I'm
be-
not going to get it to you.
I
Sorry.
wonder if it
Yeah.
would be interesting to see if he switches it up in the middle of the same batter. Like if he would throw some of the pitches
don't-
lefty and some righter. Are
I
you
don't
allowed to
think
do
that's
that?
legal.
Yeah.
I don't
Oh.
know the answer to that.
That
but I
should
don't,
be legal.
I don't think that's legal.
Hey,
You can't
that's
do
a-
that in the batter's box either. You can't
Oh,
switch.
you can't switch either?
I'm pretty sure you
Huh.
can't do that.
Can you bring in a relief pitcher during an at-bat?
Got to be injury related. I believe.
Okay. All right.
Yeah.
Just
So, yeah,
another
that makes
reason why I
sense.
don't like baseball. I'm not a baseball guy.
Yikes.
Yeah.
Ooh,
I'm not. I don't
America's
like baseball.
game?
It's
Oh.
boring.
Wow.
I can't take
It's gotten
it.
better. They've cleaned it up. It's gotten quicker.
How long are the games?
They've gotten them way down.
Well, wait.
Under 3 hours.
Oh, under 3 hours?
Yeah, yeah,
Okay, so it's
there's
comparable to football.
Pitch clocks now.
Ah,
And now the worst part about
That's
baseball
it.
was between every pitch, the batter would get out, he'd adjust his cup, he'd redo his batting glove,
Sure.
he'd do his helmet, he'd tug his little sleeve. That was in between every pitch. They really can't do it anymore. They have a clock now where you got to get in and go. So it's streamlined the game a bit.
Who was that? Who was the guy from the Red Sox who his gloves? Latin dude.
You're probably going Big Poppy?
No,
Yes.
no.
Or Manny.
Oh,
No,
Manny?
not
Manny,
Manny.
Manny,
Manny was
Manny either.
great for every.
Not
Well,
Manny
most
either.
of them are
Yeah.
or were at one
Manny
time.
wore every pad you could think of.
Yeah.
Yeah.
Did he date the guy dated Mia Hamm maybe for a little bit? Soccer player?
Oh, you're going Nomar Garcia Para.
Yes.
Nice.
Garcia Para.
Nomar.
Right. Yeah, that's who I'm talking about. Remember, he
Nice.
used to like wipe his
Oh,
gloves.
yeah. Oh,
and Velcro,
sure.
unvelcro.
Yeah, 15
right.
times. Yeah.
I feel like we're
Nomar.
stalling. We have a lot to talk about.
No,
We
no,
should
no.
not be stalling
Well,
real estate.
well, the
We're
Nomar.
ambidextrous.
Yeah.
well,
Proud.
the market reports came out this week and interest rates. So this is what I saw, Mike, earlier in the week, right? So I was waiting to see if the Feds were going to reduce, Feds were going to jack up the rate again for the 13th time. They've done it 12 times in the last year, and we're at 5.5 right now, I think, percent for bank-to-bank lending.
And their meeting was on Wednesday.
And the meeting was on Wednesday. And then I heard that they did not raise the rates again. They were going to hold tight, but they have 2 more meetings this year. And they said they will raise the rates again if they feel they need to, but they're going to hold tight. Then the next thing I heard was that the interest rates went up like a quarter point. And I almost fell out of my chair when I saw that, because I was like, now we're in territory we haven't been in the last 2 years. We're in completely new territory. But then when I
Fetty's
went back
report.
and looked at Fetty's report, and it
Yeah.
shows that we actually went down 0.01, which is basically flat.
Yes.
So what the heck happened this week, Mike? Because I don't know what's going on.
So Freddie's report comes out Thursday to Thursday,
Mhm.
and it's the average for that full week.
Right.
So we didn't have a spike until Thursday.
So what was
Right
the,
after when the Fed on Wednesday basically said, "Hey, guys, we're not going to raise it this round, but we're still, we're on this fight against inflation." And
so why did that make the rates go up? I don't understand.
because
that.
it wasn't all rosy news. It wasn't like we have decided policy wise we're good. We've done what we needed to do. Right. That was the optimistic news. The Fed is not going to be raising interest rates anymore. They're going to hold. They're going to stay there. But they came out and said, we're holding this time, but we're, there's a good chance we're going to bump it up again. And all of a sudden there's a spike. And then it came down a little bit from that spike. But you see what am I trying to say? It's not,
it's a churning market. It's very churlish.
Just Freddie's report, you'll see, because they had, basically 6 days of flat to downish, like leading up to the Fed. And then they had 1 day where it spiked.
Well, I'm not so concerned about the Freddie Mac report, because we've always said that's been the benchmark. It isn't the real
Sure.
rate. But what not bothers me, what I don't understand is the news that the Fed came out with this week, to me, was not surprising at all. I mean, if you read, Johnny, you're a deep reader. If you read, were you surprised by anything that the Fed said? They said, hey, we're going to hold off for a little bit because we got to this rate that we said we were going to get to. We did it as fast as we could. We did it. Now we just got to take a breather. Things are looking okay, but we're definitely not out of the woods at all. And we might have to increase in the future, but we don't have to right now. And the other thing I want to tell you, I think this is the other thing that spooked everybody, is that all this talk about the interest rates dropping very soon, that's not happening. Right. Now, that's the part I could see that everybody kind of freaked out about, is because I don't know why, but earlier this year, like January of this year, everybody was predicting, oh, yeah, interest rates will go up. Maybe we'll get to 6%. And then by the end of the year, but by the fall, we're going to see it go down again. It will be in the 5s.
I've said that before. I heard people I respect who are in the biz talking to me earlier this year when there were the whole 3-2-1 buy down thing. And they're like, don't worry, like the second half of this year, you're going to see rates start to come back down. I'm like, I don't
see it.
I talk with my boys all the time about this. I don't see how that's possible when the Fed is giving no indication that they've achieved their goal and they're going to stop the fight. Like, but I'll tell you why. I'm looking at a headline right here, Jim. It says, don't buy the Fed's rate projections. And this is from a respected journal. Most Federal Reserve policymakers project the central bank will raise rates one more time this year, period. That doesn't mean it will, period. Right? So what is that? Like, they say they're doing it, but that doesn't mean they're going to do it. Like, that's why you get this uncertainty of this hope, right? Because you get headlines like that.
Right.
We're saying they have given us every indication that they're not done battling their battle. And if anything, they're going to say, we like what we've achieved. We want to maintain this. Right. Which also means we're not going to be lowering interest rates.
So is there a chance that they might not raise rates again? Of course there is,
Yeah.
but it all depends on how things evolve between now and then.
We have we have a meeting in November. We don't have one in October, so we have one in November and December.
Sure.
So we're going to have.
They might say we're going to continue to hold with
they
plans
could.
of possibly.
They could.
Yeah.
That's why I don't understand why everybody freaked out, except that they were going to hold the interest rates longer, at these, I don't want to say inflated rates, but, at the higher rates longer.
Right.
I could see that being scary and people getting a little spooked by that, especially because they were unrealistic about what the expectations were at the beginning.
Yeah.
If you're expecting, an awesome thing to happen, but the chances are not great that that's going to happen. And that's what you're banking on. That's not really a good plan. That's just a wish and a prayer.
Yeah, and somebody was asking me, they had advice from a local real estate investor guru who we all know. I know you know him well. You used to work with him. DD, right?
Right.
And he was talking about something like rates would be, in the 5s and 6s, next year. 5s, right? Let's say somewhere in the 5s next year.
So crap's going to hit the fan then, evidently.
I don't understand how that could possibly happen unless the Fed undoes half of what they did.
Yeah,
right?
They would have to start easing.
So how many rate hikes have we had?
Easing
12,
12.
13?
Well, 11 or 12. I read two reports. One said 12 in the last year. Another one said 11 this year.
So if the Fed is scaling that back by half, let's say the 6 rate reductions, right? Or the equivalent, 1 rate reduction, but a big one, which is never going to happen. What does that mean? What does that mean, Johnny? What if they're doing that? What does that mean?
That means the economy's not doing good.
Things aren't good at all.
And they're trying to churn up the economy because we're going into negative GDP.
And we talked about it outside. We talked about it last week. What's the one thing that's going to make, cause that? Default rates.
Yep.
Oh, unemployment. Yeah,
unemployment,
and then leading to
default. Right. It's going to be a step. If we ever go through because right now there's nothing
will lead us down the recession line.
It would,
and then here we go.
But the one
and
thing,
then we'll get some QE, and we'll be able to get low rates again, and your house will be worth $1 million.
Right, it's gonna
or the bottom falls out. And the houses are, it's just.
Yep,
I can't imagine.
Me neither.
I don't see it.
No, I don't either.
I don't see it.
Me neither. It's kind of crazy. So the thing is with the interest rates right now, Mike, what are the average? Not 850 credit score, not 780 credit score. Let's just say you're a 670 credit score or something, like just an average credit score.
Yeah.
With 5% down conventional. What are you kind of looking at right now? He's making faces.
I
he
hate
looks
doing
like
this,
Ross right now.
We got this. Let's say this. Freddie's report was 7.19. So call that
Right.
7.25. So I would say what this report doesn't show is what points are being paid. But I would say if you want 7.25 and you're like a 670 credit, conventional 5% down, you're paying money to get that 7.25. 1-2 points as percentage of, you're borrowing 300,000. 1 point is three grand.
Yeah.
So you're paying points. You're not going to find a par rate. There's not going to be any reasonable par rate, meaning the rate that doesn't cost you points is going to be nowhere near that 7.25.
If you
be
get
8
if
something.
you got a 6 in the first number of your credit.
Yeah, it's just, you might, and you probably a good candidate for an FHA loan at that point. Or there's some conventional programs where you don't have these ticks on the credit based on like your income tier. So
now I do have a theory as to how the interest rates could drop. I don't want to say regardless of the Fed, but not related to the Fed moves.
Okay.
Mortgage companies are jonesing right now. I mean, you guys, the mortgage industry, I'm reading reports, applications are like the equivalent of where we were in 1996.
Nice.
Right? So 1996 application rates. So something's got to give for the mortgage companies or the banks because they want to lend more money. And if the rates are too high and people aren't coming in, I think that they would automatically, naturally reduce the rate so they can get more business, right?
So basically shrink the profits.
Yeah.
You would think so. And there have been times of turmoil in these last 2 years where people are talking about you see these really low rates and you're like, well, it's simply not sustainable. So if you see that happening, Jim, where like all of a sudden this lender A is the best game in town. Look what they're doing. Guess what? They're not long in the game.
Oh,
they're just not, it's not sustainable. So they're doing like, hey, how do we keep the wheels turning? Like we ramped up for this refi business. And now
so explain that to me. So if I were lending $500,000 at 5% and I was the lender, and now I'm lending $500,000 at 7.25%, right? But nobody wants to take my 7.25% financing, so I drop it down to 6%.
Right.
How are they going to not be sustainable if they were doing loans at 5% at 500,000 before?
Because this has to do with the mortgage-backed securities world, Jim. Because so lenders, direct lenders like the mortgage firm, even the biggest banks you've heard of, are not holding that paper, right? So they are
processing the paper and then lending.
They're doing the loan on a profit margin. And so, yes, they could shrink their profit margin, but it's not like, hey, I'm going to take 6% because it's better than no percent, right? It's like, no, I'm going to do this loan. And normally I would make X amount of dollars. And that helps with overhead and costs and paying commissions and, all of that stuff. And now I need to do it for something less than X. And so they also, if they do that, they don't have enough money to operate their business. So then they have to downsize and, all of these things happen. And so it's just if you see that happening, it's because they're running out of funds to feed their engines.
Right.
Right. And so we just got to get more loans in. The problem is it's not a sustainable model for them.
So if I'm following exactly the way you were saying, there's a point where the risk for everybody involved, from the direct lender to who's going to be taking the note, right? There's a point where everybody goes, nope, can't do it anymore. We can't lower these. Our margins aren't there. We can't lower them anymore.
Right.
And you just can't go any further. It's not sustainable. It's a little different than the world you were just describing, where there's one lender who's going buck just to try to churn up more business.
Right.
But all in all, it's so connected that if it starts coming down, we'll probably see it across the board, but it's probably just not there.
Yeah, and there's just be some lenders who can maintain, who can keep the wheels. I mean, the mortgage firm has been very well positioned from a cash perspective. Like they learned from the last one, they're not like overspending, right? They're not. So yes, the mortgage firm has had to cut back on support staff, right? Like underwriting staff, processing staff.
Sure.
Just because the amount of loans are less, right? So you can't afford to pay people for doing if the work isn't there. But so there are certain lenders out there who just have not been able to sustain, and you've seen their market share shrink.
Well, it's kind of interesting because
The big players, some of the big banks are just not playing in the market at all.
well,
right?
well, here's a big player that is actually messing around with interest rates to get more buyers. Lennar, the builder,
Yeah.
in Colorado right now, they're experimenting where they're offering 4.25% mortgage rate in some of their communities in Colorado right now in order to get the houses sold. And what they're saying is they can afford the 4.25% to offer that because what they're doing is they're taking out some of the quote massive profits they've been making throughout the last past years. They're making so much money that they can still offer 4.25% financing to their buyers.
Sounds like a
and
gimmick.
still make a profit.
So
Interesting.
sounds like a gimmick, Jim. So 4.25 is less than what Fannie, Freddie, or whatever are paying on notes, right?
Mhm.
As far as like the profit over whatever, right? So they're losing money. Nobody is going to buy that loan
Right.
because that
That would
loan is
make
not
sense, right.
profitable. So it's either some sort of 3-2-1 buy down scenario where they're
Okay.
basically buying down the first 3 years of the note, and you basically prepay those points, prepay that interest, which is perfectly legitimate. There's a lot of people talking about it. We've talked about it on this show. So they're doing something like that, Jim, or they're spending the money up front to buy down the rate.
Actually,
But I
they're
can tell
saying
you-
it is a buy down.
Yeah.
You're right.
So to get to 4 something on a 30-year loan right now is lots of money. Lots of money.
Yes,
Lots of
a
money.
lot to get
Lots
to
of
4.
money.
That's what I was thinking. That's
But
a
they-
massive
they-
amount of
they
their profit.
roll that
they're-
into the loan, right?
No, they're just
As
basically
the as the builder.
if they're doing a 3-2-1 buy down. Do we have time to
Mhm.
talk about
Yeah,
what that
yeah.
is? So if let's say your rate is 7%, well, in the first year of the loan, you're going to be paying 4%, second year 5%, third year 6%,
And then you
and
go
fourth
back
year
to
and beyond
7%.
7%. So how that works is you get the seller to pay the difference between the 4% payment and the 7% payment,
But
right?
if the seller's a builder,
The seller can pay for it. Any seller can pay for it. But they're basically saying, so Johnny, let's say your 7% rate, your monthly mortgage payment, principal and interest, I don't know, $2,000. Okay. At 4%, let's say it's $1,700. So the builder is prepaying that $300 gap for the first year, and then that gap will get shorter at the 5, 6, up to 7. So they're basically just the full mortgage payment is made, the full principal and interest payment is made, but the builder is putting money in escrow to make up the gap. So it's definitely a benefit for you. You still have a 7% loan. They're just kind of like prepaying their portion of the discount up front.
Yeah.
Which is different than a permanent buy down. Permanent buy down would be like you pay points up front, and then now that's your 30-year fixed rate. You're going to be at
Forever.
5% for the 30 years.
Right.
So
it's an attention grabber is what it is, but
Sure.
the devil's always in the details. right?
Well, it is, and that brings me back to the inflation stuff and talking about interest rates. There was an article, and I was like, yeah, and I thought this would be good to bring up because of Johnny. It's like, what's the headline? I want to read the actual headline because it's a good headline. Hold on.
While you're finding that, so this,
Right.
yeah, like
That's
if it's a builder doing it, Johnny, my red flags about their altruism like go up a little bit. So it's making me think, okay, so yeah, they're going to take their profits that they've earned, and they're going to no, they're taking the profit that they're earning on the home that they're selling you, and they're going to take a haircut on, right? But that doesn't mean that they're not making money,
Right.
They're just not making as much as they would have otherwise.
Sure.
But maybe that tile that you want is a little bit, 1.1% of what they normally charge for the tile, right? That backsplash you want, or the marble, countertop, or whatever it is. So they have ways of kind of increasing their fat and then reducing the fat.
Sure. And making themselves so as new construction, you're already kind of favorable anyway, right? Because I don't know how the inventory is in Colorado, but I'm guessing it's similar to ours.
Gotta be tight.
Probably
Gotta be
tight.
tight.
Yes,
Yep.
it is.
So there's just layers of already built in kind of intrigue and awesomeness. And then you start flashing headlines like that. I think
Sure.
you get a lot of people interested. But
Sure.
again, if you're not working with people that are savvy and understand all the nuance of the deal, you can get yourself a little like, wait a minute.
So talking about these higher interest rates, there was an opinion piece in the New York Times, and it said, and I thought, yeah, this is a good point, just to at least talk about it. The Fed drove up mortgage rates. Why doesn't that count as inflation? If you think about it, we're trying to deflate everything, right? We're trying to deflate our prices, cars, energy,
the cost of
consumer
living.
costs, the cost of living. But the way they're doing it is jacking up rates, which makes your credit card debt and your home prices more expensive. And if we're going to count inflation, housing has to be, and they don't count housing as part, if you think about it, they don't really put housing as really part of the inflation equation, and
no, but they went after housing to
but
cool inflation
because that's their blunt tool. They only
Yeah.
have this blunt tool to fix it. They don't have all different tools to work on things.
So it's like, you're paying too much for gas. Let's pay more for the house.
Yeah, let's jack up the interest rates so you have less money to pay for everything, which will affect your ability to pay for gas.
So it's we make you pay more for all this in the name of getting you to spend less money on other stuff.
Isn't that kind of crazy when you think about it? So I thought this is a great, I thought this is like a good perspective to have on this.
But does it also, because your home is ideally an appreciating asset, does it make sense to drive your dollars to an appreciating asset, which is locally invested, nationally invested, versus spending money on stuff that is out, potentially imported or, supporting another economy?
Well, that's the other thing that bums me out about affecting the housing market. The housing market, and I guess this is why they're okay with this. The housing market spills into so many different other economies, right? Because you got the furniture people, the fixer-up people, right?
The real estate
AC people, the mortgage people, the AC people, the title company people, the insurance people,
the radio show people,
right? Yeah, it's just like you keep going on, and it does filter out to all the economy. But it's like they're taking the biggest purchase of people's lives, if you will, and then turning that into the squeeze of the pain in order to get them to stop buying other stuff. And I just think it's interesting that they don't consider housing inflation to be an issue. It's like, oh, well, that's just the cost of doing business.
I've never thought about it that way. When you say it, it's like, yeah, that makes sense.
Well, but remember, our inflation numbers were where they got to when our interest rates were 3%.
Exactly.
So it wasn't caused by necessarily the housing market. They're trying to control it through the housing market.
The housing, they created a monster.
It's way above my pay scale. You could never convince me that it makes sense the way they're doing it. But
we said it for years and years, Johnny, when the interest rates were super, super low, right? We should have done a little thing saying interest rates are too damn low, right? Instead of rent being too damn high.
We heard for years about how the economy is the best economy we've ever had. They're the world's best economy. And it's like, well, then we need to be raising interest rates. Sitting at zero while we're in the best economy ever is absurd.
Yeah, that was just crazy town. Yeah. And the thing is, you and I were always saying,
let's go.
They should start adjusting it now so that we don't have problems in the future. And now here we are in the future, with the problems that were very easily to predict, much earlier. And the other thing is now we have everybody trained like Pavlovian dogs about interest rates, what they think normal interest rates are, and what the average person thinks what normal interest rates are totally out of whack.
Yeah, we're kind of
with
there.
History.
We're almost to normal. We're almost to normal. Yeah.
Well, we're almost at normal. We are over the last 30 years. The Freddie Mac report last 30 years was 7.75.
We're almost there.
So we're there. Yeah. So this is kind of like the new normal. So when the Fed says, you know what?
Not the new normal.
We're
this
probably
is the normal.
Right. That we're going. Well, I almost want to say the new normal because
it's newer.
Well, the thing was over the 40 years when we started the show, it was 7 to 9%.
Yeah.
And it was much closer to the 9 than the 7. Okay. But that was the range. But what they did is recently they just stripped out the last 10 years, the first 10 years of the 40 years that they analyzed, because interest rates have been low for so long. They didn't want to skew it with the numbers from way back in the day. So they did a 30-year report. And that came out to 7.75. So
because the early 80s were
great. Well, that was 18%. Yeah.
We were not a great economy.
Right. So the thing, it's going to be interesting, if we stay at these rates, some people people will finally, it'll take 6 months, 8 months, 12 months, and people will just get used to it and go, okay, I guess this is the way it is. It's time for me to do something with my housing and go ahead and pull the trigger.
The people out there who are waiting for rates to drop have to have it. I mean, they have to be prepared that they're not going to drop. And what are you doing
for
in
a
the
long wait?
meantime?
I have
Yeah,
a
yeah,
couple. I have a couple that I started working with 5-6 months ago, and they've been very price concerned.
Yep.
They're the kind of people, and don't do this if you're a buyer because it'll drive you crazy and make you make wrong decisions. They're the kind of people to go back to find out what the seller paid for the house back in the day. So the comment is, they paid $300,000 less for this home than they're asking for it, and they haven't done anything to it. No new kitchen, new bathrooms, new flooring, new paint. Now the place might be in excellent condition, right? But in their mind is they paid $300,000
They
less.
can
I'm
make
not
less.
giving their
Sure.
price, and then they will turn in a price that's too low. And then other people gobble up the house, and then they're stunned, literally stunned that somebody would pay the other price. And you would do the comps, and you would say to them, "This is what people are paying for in this neighborhood. This house is priced correctly."
It's okay to do that one time. Are they doing it multiple times?
They look at everything, they analyze this particular, and I'm not picking on this couple. It's very common for some buyers to think this way. They look at stuff they looked at 2-3 months ago and still follow the property to see what's going on with it.
Oh.
Right. So they knew when it went under contract, if it went back on market, if it went expired, they kind of follow all that.
I don't
And in
mind.
the last 6 months, though, Mike, how much has the interest rates gone up?
Yeah.
So they've been worried about price. And meanwhile, the interest rates are going up. And they're not even thinking about that. They have a mortgage company that doesn't communicate with them very well. I've been trying to get them over to you.
As far as pre-approval? Oh,
They
so they're
just found out-
actively I thought they were like passively shopping.
No.
Oh.
I've shown them like 30, 40 proproperties.
Like,
Okay.
Wow.
And then,
Holy
I've showed
smokes.
them a lot of
Wow.
properties. Now, here's the thing. I said, you better check with your mortgage company to find out what's going
Are
on.
you still approved at the price point that you're shopping at?
$200,000 lower.
Yeah.
Oh,
Yeah. Their purchase price
Just
power
from
dropped
interest-
from probably
200
from when
grand
they
just from the
started to
interest
where they're
rates.
at now.
Yep.
oh
Yeah.
my gosh.
Yep. So they could afford 200,000 less for the same mortgage
And
payment.
so here, like, I don't mind if you have a
that hurts.
target payment, right? Like, I need to be at this payment, and I also want to be in this neighborhood, and I need this many bedrooms and bathrooms. Okay, that's perfect. So now, as long as you can wait, and you don't mind waiting for however long it takes, what you want to be in this neighborhood. You need to be paying this much a month. Wait for the prices to come down and the interest rates and all of that. Those stars to align where you get that payment,
And then boom.
boom, you're ready.
Yep.
And you're ready. But looking at what somebody paid for a home, even a year ago, 2 years ago, it's simply irrelevant because the seller, put yourself in the seller's shoes. The seller is going to sell it for as much as they can.
Exactly.
That's it.
Exactly.
So
So the idea is, and you know what? They get the benefit of I call it natural appreciation. So like if you haven't done anything to the house, your house, if we're in an appreciating market, your house will naturally appreciate. Now, will it appreciate as much as if you had fixed up the house over the last 15 years?
No.
Yeah, it would probably
Not as
appreciate
much.
more. Well, no, it would appreciate more. So like if Mike had the same house I did, we both bought it 15 years ago. Mike went ahead over the last 5 years and updated his kitchen and bathrooms and stuff because he wanted to. And I had everything original, but it's in excellent condition. Mike's house would be more desirable and probably get more buyers at a higher price than me. But my house still will appreciate over that same period of time that Mike's house appreciated just from natural appreciation of the neighborhood.
Of course.
And buyers sometimes don't think that way.
And Mike might not get dollar for dollar return on his investment either.
No, but he'll probably get more than I will get for the same house.
Yeah.
Why wouldn't somebody pay for the newer kitchen, newer bathrooms?
And every upgrade isn't equal. I mean,
No, it
you know,
isn't.
and you explain that to many sellers.
So, if you're trying to divine what the sellers not morally, but what you think they should get as a fair profit for buying the house 15 years ago and not putting anything into it,
right.
that's not making decisions.
Not in this market. Anyway.
Not in this market. The inventory is too low.
Yep.
I had another buyer who was so frustrated about this whole thing. They're like, I don't even have to buy right now. I could rent for 3 years and it won't affect me at all.
Yeah.
Well, that's
And
good.
I was like, that's not, I go, well, the effects that you're going to have are the effects that you don't even understand. I go, by the time you've been looking right now, if you wait another 3 years, what are you going to wait? He goes, for the interest rates to drop. And I go, and what do you think is going to happen then? Right? And they pause, because then when they think about what they're saying, then they realize the answer is going to be the price is going to go up because interest rates drop.
Oh yeah, and then
Right?
you're in bidding wars.
Right. Then you're in bidding wars. So I said, wouldn't it be better to buy now at the higher interest rate, get that appreciation when the prices do drop, right? So you'll get that price appreciation, but you're a homeowner now, so you get to participate in that price appreciation, as opposed to the people waiting for the right moment. And now they're going to pay the higher prices at the lower interest rate. And if you don't need to buy right now, you don't have to make these harder decisions, because these decisions are kind of hard.
Yeah, sure.
No doubt. But if you're really thinking, I need to buy a house, I need my kids in a certain school system, I want to have appreciation, I'm tired of paying my landlord and watching him jack up my rent every year, every time I get a new lease, it's going up. I want some appreciation. I want to be part of that great real estate market that we have in Florida.
Potential for that.
Because renting,
and as long as you don't have a timeline where you have to sell for profit in X amount of years.
Yeah. So if you need to buy the house, stopping from buying the house now, waiting for a better market, it's very hard to determine what a better market would for you be. Because if the interest rates drop high 90 percentile, prices are going to go up.
Sure.
If prices do go down, we're in a really bad economy. If prices start dropping, we're going to be going through the bad economies we had, COVID, 2008.
Yeah.
Okay. And if we're in that kind of economy, you don't even know if you're going to be positioned to ready to buy a house.
You might not even have a job.
You might not even have a job.
Start making amends with your family who own their home.
Yeah. So it's really important to not overanalyze the market. If you need to buy the house, you probably should move forward. Now, continue the economy, because I know we don't have that much time.
Yeah,
but
just one more just on that.
Sure.
So if that's what you were saying, you simply have to know if you can do something. So you have to be prepared when the opportunity presents itself that you can pull the trigger on it. So you need to know what your credit's looking like.
Know your numbers.
You got to know your numbers.
Know your numbers. Step number one.
And even if you're not an active shopper, if you're a passive, if you're window shopping, but if something comes up, you want a shot at it, you got to know your numbers. You got to be prepared.
Yeah. Now,
FloridaTalkRealEstate.com.
Here's the other thing. We could wrap up with this. We don't have to take too long, but it's kind of interesting. By the way, so we're going to be talking about student loan debt right now. The law office of Paola Krasker on September 28th is coming to our office in Boynton Beach, the Keller Williams office, to go over everything about student loan programs, to actually teach the realtors in our office to understand this, because it can greatly help their customers getting loans by reducing student loan debt. Mike is an expert on pointing out when people need to do that. So we're going to bring in Paul to teach agents how to do it. But I'm inviting the regular public, if they want to come to that meeting, just go to Florida Talk Real Estate and say, hey, I want to be part of that. I'll give you all the details. I'll invite you as my special guest. There's no money for this class. It's a free class, but it's really for realtors. So my broker doesn't even know I'm doing this. So anybody that wants to come is coming as my guest. So give me a call. All you got to do is go to Florida Talk Real Estate.
On the .com or Facebook?
FloridaTalkRealEstate.com would be best. Okay.
Excellent.
Or you could call 888-973-7828, but it's all there on the website.
And should we real quick, this is the month where student loans which have been deferred for a long time are coming due. So if you have student loans, guys, don't ignore them right now. It's critical. You got to check what's your payment. You might have a payment due. Don't let them go late.
Yes, because it affects your credit. And here's the thing. It says, here's the headline in the article. Will restart of student loan payments be the last straw for consumers? And you know what's kind of interesting about that? In 2017, 2016, 2017, 2018, we talked a lot about how student loan debt was dragging down the economy back then. People forget. But pre-COVID, the biggest economic drag on the economy at that point was student loan debt, because we had almost $1 trillion of student loan debt people were paying or in phases of not paying and should be paying, and it was very complicated.
Credit card debt has shot past that since.
It has.
Yep.
But I'm wondering if now that people have to go back to deal with this, I'm also wondering how many people actually were paying and if it's really going to impact as much. But here's
what
the
really
thing.
sucks is that credit card debt has shot past it while people aren't paying student loan debts.
Yeah, so it's going to be
While that faucet was turned off, you were not paying $300, $500, $700 a month, whatever it is. Your credit card debt was stacking. Oh, and now that faucet's getting turned back.
So there's a program out there. There's a program out there that we've been using, the income-based debt relief program for student loan modifications. When I say we, the law office of Paola Krasker does this. We don't do it. It's above our pay grade. But we've geared a lot of people over there. And let me just tell you something. We don't charge anything, on our side to do the student loan thing. We just get you to Paul and you do this stuff. Student loan debt is a massive, massive problem right now. We've helped hundreds and hundreds and hundreds of people analyze their student loan debt and try to get reductions. If you need help on student loan debt, like Mike says, do not miss your payments. Have a plan on how to deal with this. You might have to pay nothing still, depending on your income debt qualifications. So give us a call. Don't fall behind on your student loan debt. Let us help you.
And don't let money be the reason you don't call. Please.
It's free.
FloridaTalkRealEstate.com.
Yes.
Get the information.
It's free.
And the odds are really good that if you get approved for this program, the monies that you save from the payments being put on hold while you're getting put into the system will probably end up paying for your costs to get into the program. It seems to have worked that way more times than not for folks. But there's only one way to know. FloridaTalkRealEstate.com. Get involved. Make that phone call. 888-973-7828. That's the hotline. 24 hours a day, 7 days a week, answered by a live body. You can find that hotline at FloridaTalkRealEstate.com. Find out. You may not qualify. You might not. But it won't cost you anything to find out. And you may, as Jim said, you may have a $0 payment that gets locked in for a year.
That's a legit
$0 payment. And by the way, if you're trying to buy a home, that counts towards your debt to income as $0, right?
Most of the time.
But you got to talk to the pros.
We have a customer named Amy, 8 years, hasn't made a payment.
Don't fill in the blanks on your own. Go to FloridaTalkRealEstate.com. Let the pros give you the real numbers to insert to your very unique equation. All our situations are like snowflakes, very unique, but this team can help you through. Buying a home, selling a home, stuck with a home, you don't know what to do. You got that student loan debt coming right back into your life. Let's see if we can help you. FloridaTalkRealEstate.com. Mike Rauch, the mortgage guy from the mortgage firm. I hope you have a great weekend.
You too, brother.
Always nice to see you.
Yeah, thanks, everybody.
I'll get you a coffee one of these days. I promise. Jimmy D, that's Jim DePolo with the Florida Home Pros team. I hope you have a great weekend.
Thank you. You too, Johnny. Thank you so much. Happy South Florida, everybody.
And that's iced coffee with goat's milk, right?
Yeah.
Almond milk.
Yeah. Lamb milk.
He likes the nut milk.
Almonds. It's all about the nuts.
Yes. Cashews makes good milk too.
Does it? Haven't tried.
And, vegan cheese. Vegan cheese with cashews.
I'll pass.
Jimothy, you gonna stick around and do the locker room?
Sure am. Yeah, we're gonna talk Colorado.
Oh, I'll be tuning in. That's my favorite topic right now. Joe and Greek, they're in the bullpen getting ready to go. We do got 4 hours of awesome coming at you. We'll be back next Saturday, 2 hours of infotainment. It's every Saturday. Remember, Florida Talk Real Estate is the .com. Know it, use it, love it, share it. Find them on Facebook and YouTube as well. Florida Talk Real Estate, right here on Real Radio.
Because you shouldn't have to get up off the couch. Tell your smart device to play Real Radio 92.1 on iHeartRadio. Real Radio weather.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. Sunshine with a few clouds through this afternoon and only an isolated shower chance as temperatures remain in the mid to upper 80s. Partly cloudy tonight with a chance for a coastal shower Sunday morning as the lows return to the 70s. More storms expected through Sunday afternoon.
This report is sponsored by Macy's Backstage. What will you find at Macy's Backstage? Here's a hint.